Millennials have poured over $500 billion. That's half a trillion into the housing market over the past year. But what's been causing this boom? Joining us to discuss, Ed Groshans. He's the Senior Financial Services Analyst over at Height Securities. Ed, it's good to have you here with us.
Yes, thank you for having me on.
Well, so according to the Census Bureau, homeownership rates are rising for the very first time in 13 years. That's driven by millennials. So what do you think is behind this? Are we saving more? Are we getting better jobs?
I think it's a combination of the two, but I think it's also getting more confidence in managing your cash flow, managing your finances, and saying, okay, I don't need to rent. I can afford the home, and I can put a little money down for the down payment, and I think that starts the process. I also think that what you're seeing is more millennials are not single, getting married and thinking about families, and that drives that decision to go and buy the home.
Right, millennials are aging.
Yes.
Yes, we are. We're getting older.
We are not. We're not.
We're getting younger.
Everybody else
We're
is,
Benjamin Button.
obviously.
Ed, in your opinion, how long do you think that trend's going to last, and how long do you expect it to go for?
It's going to be at least 5 years. Could be as long as 10 years. Millennials were a little slow out of the gate compared to prior generations. So what we saw is them staying at home more or renting for longer, getting married later, having families later. So now that we're in that process, we're going to see this go 5, 7, possibly up to 10 years.
Wow,
Yes.
that's a really long time.
Yes, and it'll be good for the housing market.
It'll be good for the housing market, but we're not seeing the increases right now. We're just talking about how housing inventory is actually quite low right now. So are millennials actually paying more because of this low supply?
Because we got in so late.
Well,
Yes.
yeah, and there's just, yeah.
Well, that's not a millennial issue other than the cost. What's happening is because of the financial crisis, many people who normally would trade up have not traded up because they saw the value of their current home go down. And so there's some people who are still stuck. So if we look at like some parts of California or Nevada, they're still underwater. So they can't trade up. And I think that that's constraining the supply. And yes, that's resulting in millennials having to pay a little more for starter
And the
homes than
mortgage
they would
rates
have.
are increasing now too.
A little bit, yes, and probably we'll see them go up more this year, possibly next year as well. But that's a smaller component, but that'll definitely work against you. What that means is that you're going to afford less home and have a higher payment for that home. So.
And of course, this year is also going to be different because of the new tax plan that just passed recently. The goal, of course, would be for most people you'd have a little bit more money in your paycheck than you could spend it on a home. So how do you, you assess this a lot better than we do. How do you feel like the tax plan will impact the housing market as a result?
Well, that depends, right? For us in the Northeast, the tax plan is not good. Right. Home prices here are likely going to go down.
For the SALT package.
That's right. So that's the state and local taxes, and there's a cap of 10,000.
Yep.
And I would say the vast majority of people in the Northeast pay more than 10,000 per year. So they're actually going to wind up having taxes that they can't deduct, and therefore pay more to federal taxes as a result.
Right.
And that's going to put a downward pressure on the homes in this area. If we move to Texas and Florida, where the taxes are lower, or the Carolinas, no impact, right? The taxes are below 10,000, so there's no change there.
We've seen the stock market react this week to Fed Chair Jerome Powell's testimony on Congress, signaling different changes in interest rates that may happen this year and next year. Should millennials be concerned about what things are going to maybe come down the pipe for them when it comes to housing, because these interest rates do then flow across the board?
Right. Well, so Fed Chairman Powell is talking about short-term rates, the Fed funds rate. Most of the mortgages are going to be based off the U.S. 10-year Treasury. So we'll have to watch that more. They're climbing lately, yes, but not as much as. So what we're expecting is 75 basis points to 100 basis points lift in the Fed funds rate this year. We'll have to see if the 10-year matches that. Most expectations are it's not. It's going to get to about 3 and settle down, and we're near there now.
And if it does, so if folks who are really interested in getting a home now and doing their homework, and they're watching this rate rise and the 10-year also rise, at what point should they be concerned or say, like, okay, I really need to speed up my process so I can lock in these rates now?
So I think a great question. I think what you have to realize is 4, 4.5, 5, from my perspective, that's a great rate.
Still great.
It's still a great rate. So back in the 80s, they were 12, 15, 20.
Right.
So they're very good rates here at 4 or 5. But
then we missed out on the 2 and 3s.
Yes, you don't want to wait forever. So if you're thinking about it and you're looking forward and you think, well, the rate's going to be 150 basis points more, you might want to pull the trigger a little earlier and look at the homes if you find something that you want or like, and buy it today and save yourself the money.
Let's go back to the conversation we were having about millennials entering the housing market a little bit later. mostly because of the weariness about the pitfalls of being a homeowner. What essentially changed that mindset that we decided to finally get in?
I think a lot of that was many of the millennials watched their parents over the dining room table or the kitchen table stressing about what happened to their house, and the largest wealth component of most Americans.
Right.
And I think that put a little fear. And so rather than go and follow the path of the parents and say, oh, I'm going to buy my home and get married and do all this, there was a big delay. And I think what we're seeing now, as folks are in the workforce longer, they're earning more, they're getting better managing their cash, they realize, you know what, and at the same time, home prices have been rising. Right? They realize it's not as scary, and they have more confidence in what they can do, and they understand the benefits and pitfalls of home ownership, and they're willing to take that risk and grow into their own space.
And overall, we talked at the very beginning about the fact that millennial home buying has driven, about $500 billion into the housing market. Now, will we see that kind of continue in the next couple of years? Yes,
I would expect to see about the same amount come through. What we've noticed in the housing market is it's a fairly steady type of demand, right? You'll occasionally see big spikes, but as generations move into the market, they tend to move in rather methodically, let's call it. So I would expect, yes, something around staggered $500 billion a year, give or take $100 billion every now and then. Yes.
Not too bad.
Yes.
All
very
right.
Good.
Ed, thank you.
Do you both own?
No.
Well,
about
see,
to.
Get ready.
This is why I'm on this show, for a reason.
Yes.
All this education I get on this.
Yes, absolutely. Ed, thank you so much for joining us today. Ed Groshans, he's the Senior Financial Services Analyst at Height Securities.